All right, cool. So I'm really excited here. I've got Howard Lindzon dialing all the way in from San Diego. G'day, Howard. How are you?
How are you? Here I am.
Wow, looks pretty good there.
You're interrupting. I'm going right to my porch to smoke a cigar after I ride my bike.
Well, hopefully you're wearing some socks as well. What do you got?
Yeah. I'm wearing my riding. I'm a big Rafa fan. I don't know if
Yeah, big brand here. Yeah, no, great.
They're like the Lululemon of riders.
Yeah. No, I saw a Specialized top on before. So have you gone for a ride?
I'm going right after.
Oh, cool. So we won't keep you too long.
No, my day. So markets open here. Even though I don't professionally manage money in the market, I'm up 5 a.m. for the markets. 1 p.m. markets close. And when I'm in San Diego, I'll go work out. I live on the beach. I'll go ride and run, and then I'll sit on the porch and tweet and start a few fights. I'll start a few fights around the world, and kind of like Trump, but with less of an audience and less of a chance of global thermonuclear war from one of my tweets. More of a chance of you're an asshole. And then I watch Netflix and go to bed, and then I do that again the next day.
Like Groundhog Day in the markets.
Yeah. The markets are, what people don't understand, the markets are one of the great, it's like in the military. You don't get a break. Like, it's just, you have a bad day, fucking
wake up, here we go again.
Whether you like it or not. You know what I mean? Like, what a great training ground for everything that athletes have to self-motivate to get to the point where there's fans and the market is just open.
No, you got to be performing every day in the market. People forget that.
Every day, but you can take a day off, but you still get addicted to the action and you watch the tape. And even if you're not trading, you got to watch the tape. And COVID reminded me, it's obviously one of the worst things that's happened in the last 100 years, but it's reminding me why people love the markets. It's the only game I know how to play, and it's a global game, and the prices keep coming down like that. The price of admission keeps coming down, and
not the stocks.
No, stocks keep going up. Well, not every stock. Only bankrupt companies and NASDAQ stocks go up right now.
I know. It's like making a profit isn't fashionable anymore.
I have my friends at eToro just sent me their bankrupt portfolio of companies that have filed bankruptcy in the last 4 weeks, and their stocks are up like 400% on average. So nothing makes sense right now. Nothing makes sense.
Well, no, because there's a savior coming in, right? So you can't get any worse if you're buying a bankrupt company, right?
Some things I'll never understand. I just don't like to argue over them.
Yeah, or you can't.
I'm like, all right. No, not for me, but I'm not going to argue if you're smart or stupid. The price is the price, and like people are paying the price. I don't know.
Oh, the question is what I got to pay tomorrow. That's what you really got to know.
Yeah.
So, I mean, Howard, a lot of the Aussies, and we've got investors, that come onto stake and trade the markets from all over the world. That they may know you. You've obviously had an amazing career so far, and you want to just give us a bit of a run through about what how you got into the markets and what you spend your time doing?
Yeah, I'm Canadian. I'm 54 years old. 2 grown kids out of the house. Well, they're in the house, but they're out of the house. And the 1 dog, 1 wife, and moved.
Why did you lay those in order of importance, or what was that about?
No, my wife won't listen to this, so I decided, why did I even bring her up? No order of importance.
Just checking, because she could have been the most important. I don't know.
She may listen. You never know. The internet could show up in her Facebook feed.
Look at these Aussies. Look at these crazy guys. What are they talking about?
I love you, honey. Got addicted to the markets because I lost money. The markets were like an exclusive club 30 years ago. So you get a little money, you get burned, and you go, I either give up for good or you go, what the fuck?
I want to get better.
Yeah. So that's how I got involved. And I don't think I loved it until I kind of gave it up. which was like 05, 06, when I said, I don't like competing against the indexes, and I'm going to hang up my hedge fund hat and just start investing in startups. I got the bug to invest in startups, and investing in startups just made my general investing much better because it gave me a longer term view of the world. Yeah. And it connected the dots of like, okay, you got these $100 billion companies here, and you have this private market here, and they're very connected. Yeah. No one's talking about it, but like what entrepreneurs are seeing is what's happening in the public markets. They're not traders, but they're like, I want to be Salesforce, because Salesforce is like dominating, and I see something that they're doing wrong, and we're going to go build that, spin it up on AWS, and we're going to build a better mousetrap.
But also you can go look into with public companies, you can actually go and see all their filings. You can see where their revenue lines are. You can actually see how they operate. There's commentary. It's an amazing place to replicate a business by just looking at the public market.
That's how they used to do it. The kids today could give a shit. Maybe they do, but they're not financial whizzes. They're coding whizzes, and they just have a pain point in Salesforce or Google or whatever it is, or Yahoo Finance like me, or E-Trade. And they go, fuck that. This product sucks. They code their way. They win by coding. The next generation will win by marketing. There's only so much you can code, and now we're seeing the next phase, which is like creative business development, strategic marketing, corp dev. So we went from this era of financial leverage to this era of engineering, ingenuity, and now we're kind of like this next phase is going to be about, well, everybody can code and everybody can do finance and spreadsheets. You got Excel, Airtable, but no one knows how to do customer acquisition efficiently. And
that's the game, right?
So the new game is going to be like, how do I get from like startup to billion? And that's the scrum that's really going to be kind of a new thing. And we're seeing it with kids. Like we go, oh, why are they doing TikTok? Well, I would rather hire a kid who knows how to harness the virality of a TikTok and a Snapchat and not pay Facebook customer acquisition. So someone who can do that is worth more than someone who knows how to do Excel. So in a world where a dropout of college who's a wizard at customer acquisition or guerrilla marketing on the web is worth way more than a CFA who knows how to run a spreadsheet.
100%.
So put that in your pipe and smoke it. These CFAs who have 5 years of like schooling to like get this degree, and it's literally worthless.
Yeah. Now the value is created from customers these days. Everyone values customers.
Tell me, if you come in they look at. 100,000 customers, I will pay you a lot of money.
Yeah.
That is the new.
Is that a job offer?
No, it's why school's not working.
Yeah.
Like people say it's system. Well, it's a combination of the system, but it's also a combination of like, what, I can't learn this shit in school. I can Google everything. And in the meantime, I'm useful to a company if I know how to get them from 1,000 customers to 100,000 customers, because I'm the only guy at the company would know how to do that. And everybody's going to bow to me if I know how to do that.
My dad was lecturing me the other day. We went away for, it was a long weekend here. My dad, the grandfather of my children, was lecturing me about how much choice, kids have, and they're not going to grow up resilient. I'm like, the world has changed. Like the world, resilience in their world is going to be different to resilience in our world.
They've had COVID. They've had a crypto crash. They've had a stock market crash. They've had people making fun of them. They've had no social life. They can't have sex. They have no money until the parents die. You know what I mean? Like, they have Netflix and Uber and Snap. They have great products, but they're in like, they can't even go hug people right now. Like, and there's no jobs, and they're in debt to school system in the United States. It sucks, and not preparing them for the world that I want to hire people. I want to hire people that can hustle and know how to work the internet, not know how to build a spreadsheet.
Yeah, find their way through that maze.
It's a giant puzzle. It's a giant maze. It's a global maze. And so I don't look at resumes. I haven't looked at resumes in 10 years. So I don't know who was feeding these kids a line of shit, but unless you want to be a healthcare worker or a scientist, you better fucking know how to sell and market.
Yeah. And even market yourself.
Yeah. So I think we're seeing that. Shopify, TikTok, we're seeing the creator economy. And I'm not going to judge anybody. I don't know where the smartest people in the world are, but they're not in one place anymore.
No, they are dispersed. So obviously you've done a lot of early stage investing. You know, obviously you can give us some of the names. I know some of them. So obviously you've got Social Leverage, right, which is your VC fund that you run. Do you want to just talk a little bit about the investments you guys have made and what Social Leverage is about?
Yeah, so I run a hedge fund for 18 years. My partners are great, Tom Peterson, Gary Bennett. We brought on a fourth partner for our next fund, Ross Hoffman. And so we invest in software startups, enterprise healthcare, mostly financial services for me, almost 90% of financial services for me. Founder driven, not thesis driven. We meet people, they have deep domain experience. Like we have domain experience and we don't want to teach people. And we don't think in a world of entrepreneurship today, of jujitsu entrepreneurship, you need people that are committed for 10 years. And the only way you're going to be committed for 10 years is if you already loved the industry you're in and you see a problem that needs to be solved. I mean, the startup was cool, Facebook and that era of TechCrunch, but now we're in the phase where like, man, if you don't know how the markets work, why are you starting financial service?
It's too complex.
Too complex, too much work. Don't kid yourself. And, and we're seeing that crypto taught that a lot of people, they were like engineers, but they wanted to change the financial world. No, financial world still works in a certain way. So you got to have 3 years admission, 5 years admission. So it's like that. And now, and the puck is always moving. So, people are chasing stuff all around, but we're very focused on what we're good at. I'm 54. So we're like, we think the financials, I think for the last 15 years, I'm like, I want an E-Trade for my phone. And I think people should be able to have a Bloomberg and Twitter and StockTwits and all these. People should be able to chat openly wherever they want. Yeah. And so I was all about the unbundling of the hedge fund and the unbundling of Vanguard. That's what I thought. And so far we got that right. And my next big bet is now that you've taught these kids how to trade off one screen, the kids have been taught to curate,
amazing.
Their world. Like they don't have 5 screens and looking at 700 tickers. They have one screen and they better figure out the 8 tickers that mean the most to them and know them. And so we think the next phase of fintech or finance or trading will be, okay, I've learned how to trade off this. So I'm already better than 90% of the people that learned on 5 screens because I know how to condense the world into one screen. But then I've got the bug and I feel like, fuck it. Like I love the markets. But you can't do the markets on this. So the next phase is, okay, I'm going to get a beautiful one screen for my desktop or a laptop. And I need a product that helps me dive into the market. So our next phase is unbundling or rebundling the world. So we invest in a company called Koifin, which is kind of like a Bloomberg, a social Bloomberg. It's growing really fast.
Right.
And it's a beautiful terminal it doesn't have Australian tickers yet, but it's a beautiful.
We don't cover those either.
Yeah. So everybody wants American tickers, but we think global tickers is important. And so it's kind of like a modern Bloomberg. Yeah. And it's free. And it's really unbelievable.
How do you spell it? Is it KOI, Finn?
KOYFIN.
Okay, so people can look it up. Great.
Yeah. And it's just an incredibly powerful desktop.
I think you actually told me about it when we caught up in San Fran. It was like 2 guys, Goldman's guys, maybe?
Yeah. Goldman. And just they built COVID comes along, all these Bloomberg people are stuck at home, all these people with terminals, and
they can't get their little dasher to work. I remember this.
And so Koifin's just really caught a break. And once you start Koifin, if you love the markets and you're working on your own, it has everything you would ever need.
Yeah. Well, that's what I love about the markets is, you can be your, the whole purpose of Stake really is to give people the opportunity to make something of themselves. And, you could be your own hedge fund and you can access the market. So it's like building that. And also once you invest in the markets, there's other asset classes. So, both of us are early stage investors. We go straight into the market. And we were actually talking before about actually buying early stage in the market. Like you were looking at you look at Shopify when it was like 20 billion and you thought that was cheap. I mean, everyone else looks at a $20 billion company, which is like a massive unicorn. Run us through that.
People in the private markets don't understand the public markets. People in the public markets don't necessarily understand the private markets. And I don't blame them. They're good at what they do. I luckily connected the dots through AngelList and Carta and Robinhood. And I think if you look at Salesforce, you can predict, first of all, what Salesforce needs to do, but you can also see all the attackers from the private space, what they're trying to attack, and you can kind of figure out who's coming after who and what areas are being focused on. Right now, there's a lot of focus on, unbundling Excel. There's Airtable, there's Smartsheet in the public markets. So there's a lot of focus always on CRM and customer, the CRM products, and Salesforce constantly going through phases of acquisition. So you see it in enterprise now, but e-commerce is really the biggest market to ever exist.
Because everything's happening online, and also with COVID, it's just like doubled out.
It's just without the mall. I mean, the malls were the thing, and now everybody has access to an endless mall from their phone. And COVID happens, and now you have to do it.
It accelerates it.
We live our life buying, ordering, testing, trying things on our phone. So I think e-commerce, and that's why you have Amazon, it probably will end up the biggest company in the world, if not Alibaba. And maybe even Tencent, but depending on how the border, the wars of digital play out. But you basically have Apple, Amazon, Tencent, Alibaba, and then there's a battle for the next,
who's coming up in the second tier.
Coming up, and you got 5 planets, and they're just trying to protect the planets. And then you have baby planets, and then you have constellations. And I'm just trying to find the constellations that could become planets.
Yeah.
And
the big boys eat.
Yeah. And so there's like 3 levels.
Yeah.
I look at the stock market. I don't do penny stocks. I don't do non-cash flow based. I do only digital companies. And I've taken the world to see that here's the 5 planets. They're 20% of the market cap. We could argue all day if they're going to be worth 30% of the market or 10%, if this is the top.
Yeah, but there's a lot of fat underneath.
Yeah, they're not going away. And then you have the war, the Salesforces and the Netflix and the Lulus and the Nikes, Coca-Colas. And then you have the next phase, which is like, how do I get to the Salesforce phase? And there's a lot of action between, a Twilio and a Spotify and a Peloton and the next phase. And that's really where I get excited, right? And
it's still market, it's a big company that's still got growth, right?
It's so big. It's just so big, and it seems boring to everybody, but Spotify is my favorite, other than Apple, is my favorite stock. And it's like, okay, the valuation will never make sense. And unfortunately, I have to throw that out of because everybody, if you're trying to put Spotify in a valuation box, you're going to short the stock.
Yeah.
But it's unshortable because it's a rare asset.
Yeah, no one's going to catch it.
Well, no one wants to short it, because I use it every day.
Yeah.
And so it's a rare asset, right? It's like gold, except it has cash flow. And in a world of rare assets, you have to start thinking, what can Spotify do? Right? Because they were in a box forever. They were in the music box, and it's a bad business because the record labels, control that business.
They own them. They own actual media.
They were in that box, and as much as I love Spotify, it wasn't a long opportunity because they just don't have the margins. But then along comes podcasting, and no one's done it well. Apple should have won podcasting, and maybe Netflix could have done it, or Tencent. And all of a sudden, this is open space, and the margin opportunity of Spotify just went from 10% to 100% or 90%. So are you going to tell me that you understand what the potential market cap of always on 24-hour podcasting with thousands of DJs from around the world 24/7? And that's all margin for Spotify. So in a world where they have tens of millions, hundreds of millions of customers, I think Spotify has $100 to $150 billion potential.
Wow.
And so they're a $30 billion, a $25, $30 billion company when I start buying them. So I like the upside of a 7 or 8 bagger to 50% downside maybe in a bear market to 700% upside.
Yeah. It's massive asymmetry you've got.
Yeah, I'll take that trade. That's no different than an options trader. And I don't have to watch it every day and stress about time decay. Time's working in my favor. Now they have to execute along that strategy, but they already have the audience. So if they're going to own podcasting, they're going to own podcasting.
Yeah.
So to me, I just get excited. And then technically the stock's breaking out and the market's strong. I mean, the fucking stock could double in 3 weeks.
Yeah, no, it isn't. I remember when Lulu was on its way out, like it had like a bit of it was just like such an obvious play. You could just see the momentum coming into the stock. And Etsy was like at a $2 billion company at one point. When I bought some, I'm like,
Etsy a little
how could
bit.
Etsy be this cheap at $2 billion? It's like ludicrous.
Yeah, I'm an idiot because I did ride that for a while, and then I gave up on it just as the crash was happening. It just technically just chopped me out. And now, only Etsy can beat Etsy at this point. So no. I'm not saying, right? Like they can't replace.
No, they're like a massive acquisition target as well for like an eBay or someone on Amazon. It's just like they've got an audience. It's niche. It's like it's got brand. It's got growth. It's like it's got eyeballs.
When people are panicking, you buy great platforms now because the upkeep. All they got to do is upkeep the highways and that's engineers. So all they got to do is update their software and they're fine.
So we've covered Etsy, eBay, Amazon, Twilio today. Like, mate, we've got to do more of this. I'm getting some ideas.
Peloton has been a recent fave. Again, relative market value. Yeah. It's a rare asset in the sense that the hardware, they're like Apple was to iPhone, like Tesla is to automobiles, Peloton is to fitness. You can't knock off the product. They have a moat. The customers love Peloton.
They could even put them into gyms. They could even go like wholesale nearly.
But they don't even need to. They need a weaker dollar because they want to grow, and that's happening right now. They needed COVID. Okay, they didn't want it. They got it, and now and they needed, but they're an attention company. They have a screen. I have a big MacBook. They have a huge MacBook on top of their, and you're spending an hour sweating and staring at that screen. So they're at minimum 1/24th the value of Netflix. So Netflix can only be as big as 24 hours in a day.
Yeah.
And so Peloton just figured out a way to disrupt 1 hour of Netflix. Yeah. If you compare the market cap a year ago of Peloton to Netflix, it was way undervalued. Yeah. That was just from an attention standpoint. Now you throw a social network on top of it, which was what Peloton is, and you throw a Lulu potential brand because they could start selling.
They got hardware to clothing.
They could build a clothing company. So it's much easier for Peloton to become Lulu than it is for Lulu to become Peloton. So I'll trade that market cap swap all day long, meaning I've been selling my Lulu and buying Peloton because it's easier for Peloton to be a $50 billion company than it is for Lulu to go from 50 to 100 billion.
Absolutely.
So it's just a relative market.
And also the way they're structured right now, like Lulu's got stores, it's got people. It's like, moving that needle is hard.
If I'm riding on Peloton for an hour and Peloton offers me a lookalike piece of clothing that I get 10% off because I just did an hour.
You earned it. Yeah.
You just click a button and it's just a piece of commodity clothing that you have an affinity towards. So I'm not saying it's easy. I'm just saying it's much easier for me to get my head around valuation gaps between a Peloton and a Lulu.
But you're thinking really big, which is amazing. Like you're thinking where this thing can go, and that's where your upside is. And it's like into that blue sky where no one else is thinking is an opportunity.
I don't think price targets and valuations mean anything in a cloud-based world. And in a world where the printer is on. Like, let's also face it, the government is addicted to buying the dip with printing money.
It's like the PAL put now, right?
Yeah. So
or is it you coming into the market, Howard?
It's not. There's not just a PAL put. There is an Apple put, an Amazon put, a Microsoft put.
Yeah.
Netflix. These companies have enough cash that if the companies that
they buy their own shares,
they buy Peloton. If Peloton drops 50%, Apple's going to buy it.
Yeah.
Yeah. So there's not just a Fed put. You have a planetary put and Bubba and Tencent. So you have 7 companies that could buy any company in the world. So that's bigger than and they don't have to print money to do it. So Microsoft doesn't need to go raise money to go buy Peloton if they wanted to buy it. They just fucking call Dublin and wire the money.
And their accountants.
They call Dublin and say, "Give me my tax-free money and let's buy."
just don't route it through the US.
Don't route it through the US. You know what I'm saying? Like these are fucking bigger than the Fed. And they don't have to print the money. So there's fascinating. I think people are so mad that there's a Fed put, and they're forgetting that there's a technology put.
No, Apple and people ask me what's Warren Buffett going to do. I'm like, he'll probably buy Berkshire stock. It's like whatever.
At this point, that's the only play he has. He's committed to that, right? Like he has no other play. He can't. I get it. Like he's stuck he can't compete with these kids that understand. They were trained on a different valuation metric, right?
Yeah.
It's a cloud-based generation, right? They're not on a spreadsheet. They're on TikTok and they're on, they don't understand, he doesn't understand scale.
Yeah, and
he
affinity
understands
as well.
Coca-Cola scale. He understands distribution. He understands cash flow, but he truly can't make the next leap. And he looks really tired. And by the way, he's fucking old. And I mean, let's face it. Like,
it's truly what he's done is amazing. Like literally.
I understand, but if you look at the 10-year returns of Berkshire versus the Nasdaq 100, it's embarrassing.
Yeah, but it's safe. You know, people like it.
No, I'm not saying, but his only play is to buy his own stock. His only play is that play. I see a world where banks go to zero. I really can see that world, and I see a world where insurance is chaotic and packaged in way different ways than like it's packaged today. So he could get disrupted on the two biggest bets that he has. Yeah. And so I worry that like people, that's a value trap. I think if in a world where banks are closing and firing and losing margin to Square and Venmo and Visa, I think in a world where people have 1,000 wallets and not one bank, and then a world where they have digital wallets, I think you could see banks really fall like 80% more at some point over the next 20 years. And I think you could also see a point where insurance just gets packaged into Amazon and into other products because they're good businesses. If Amazon knows how to mathematically do these insurance plays, and I could see where his insurance portfolio completely implodes. Yeah.
And his audience is above 50 ultimately. Like if you look at his businesses,
they're dying. And you got Dave Barstool Sports making fun of him every day, and he's like gambling. So you have a new generation that says, fuck you, Warren. Like I wouldn't say fuck you, Warren Buffett. But the 30, 40-year-old will say, fuck you, Warren Buffett. You had your moment. You're old. You're Fox News. You're CNBC. We don't buy your railroad strategy. You know, we don't like your airline strategy. We're going to go fucking.
Well, he doesn't like it anymore either.
Yeah. Well, now you have people dunking on him because they were buying airlines and doubled their money when he sold it. So it's like it's like a perfect storm of anti-Warren Buffett. Yeah.
No, awesome. I mean, look, that's an amazing place to end it. It's you've got your cycle to go out to, and I've got to start the day at work. You can see I'm literally just waking up. It's a perfect storm for me. But Howard, it's truly amazing to have you. You know, the insights are just so different, and you know, I think you're so accessible. So thank you for everything you've done actually for finance. I think it's you know, you've deserved the success you've got.
Yeah, I appreciate it. It's good to have finally met you and get back on the show.
Yeah, I think we had dinner in San Fran, and I'm like, Howard's perfect. He'll be brilliant for this, and you have been. So thank you.
I had a great couple of weeks a few years ago in Sydney and Melbourne. So it's like I grew up in Toronto, which is a lot like Sydney, except you have better weather. And Melbourne. No, sorry, Melbourne's a little bit more like Toronto. But great cities. There's a huge financial spirit, swashbuckling, civilian spirit. There's so many fintech startups there. So
no, we're trying. Yeah. Awesome. Well, look, as I said, we'll have you on any time. You've given me about 20 ideas, even to run my own business. So thank you. I appreciate that. And I'll actually just, you know, I'll be in touch and we'll get you back on again.
All right. Cheers.
All right. Okay, Howard, I'm going to stop recording.